Ken and Jill own and run a successful company, Web Proprietary Limited, that develops websites for their customers. They each own half the shares in the company. Web owns a large office premises, leases another premises, and employs a number of professional employees that develop websites. It also employs a number of administrative staff. Ken and Jill would like to know whether they should set up a service trust arrangement to improve the structure of their business operations. A service trust arrangement involves a service trust taking over the management of some of the non-professional activities of a business. Typically, rather than the main business paying for items such as premises, office equipment, and administrative staff, these will be paid for by the service trust. The service trust will then charge the main business for providing these non-professional services. It will typically charge the business for its costs plus a markup in order to make a profit. The service trust will be controlled by the owners of the main business and will often be in the form of a unit trust with a corporate trustee. The main business utilising a service trust can take a number of forms, including a company, a partnership, or even a sole trader. The unit holder of the service trust can be the family discretionary trusts of the principals of the main business, though this will not always be the case. The service trust arrangement, in substance, shifts some of the profit from the main business to the service trust. The service trust will then distribute its profit to its unit holders. In the case of Ken and Jill, they decided to set up a service trust called the KJ Unit Trust. They incorporated a company called KJ Trustee Proprietary Limited to be the corporate trustee. Half the units of the service trust are owned by Ken's family discretionary trust, and the other half are owned by Jill's family discretionary trust. The KJ Unit Trust takes over employment of the administrative staff of Web Proprietary Limited. It also takes ownership of the office originally owned by Web Proprietary Limited and takes over the lease of the office that was previously rented by Web Proprietary Limited. The service trust, after applying a markup, charges Web Proprietary Limited for the use of the two premises and the administrative staff. This has the net effect of lowering the taxable income of Web Proprietary Limited. It also results in the KJ Unit Trust making a profit that can be distributed to the family discretionary trusts of Jill and Ken. This arrangement enables income splitting and can save tax if the family members that the discretionary trusts distribute money to are on sufficiently low tax rates. There are potentially some other non-tax advantages to service trusts. For instance, by having the premises transferred to the service trust, there is an additional layer of asset protection for Web Proprietary Limited. Also, it potentially allows Web Proprietary Limited to focus on its core business activities. However, the ATO, while allowing service trusts, does emphasise that there are limits regarding the markup that they can charge the main business. The ATO is of the view that if the markups are excessive, then potentially the amount paid to the service trust will not fully be deductible under the general deduction provisions. The ATO is also of the view that excessive markups can be subject to the General Anti-Avoidance Provision, Part 4A. One option is for the service trust to comply with the indicative markup rates that the ATO has specified in a booklet called Your Service Entity Arrangements. When doing so, the taxpayer should also show that no more than 30% of the combined profits of the main professional business and the service trust is earned by the service trust under the service arrangement. If the taxpayer complies with these rules, then according to the ATO, they have a low risk of being audited. However, the ATO has made it clear that the indicative markups specified in this booklet are a general guide, and ultimately the correct application of the law depends on the individual circumstances. A taxpayer can charge more than the indicative rates in the booklet if they have a justifiable reason for doing so. For instance, showing that amounts charged by the service trust are similar to amounts charged by comparable independent suppliers might indicate a justifiable reason for charging higher rates. To recap, service trusts can be used to separate the core or professional activities of a business from the non-core or supporting activities. The service trust supplies and services the main business entity, applying a markup on costs. Profits from the service trust are distributed via tax-effective means, and assets are able to be protected from the core business operations. While a service trust can, in some situations, offer some tax and non-tax advantages, it is important to be mindful that there are limits regarding the markup charged by a service trust so that anti-avoidance provisions are not triggered.